All right, well, welcome back to the iWealth podcast, and today we're joined by Mr. Brad Connors, and we're talking about life insurance. I've got a beautiful wife, and she's definitely hot and healthy for the most part, and well, real healthy and hot, and and my question
You
to
overmarried.
you
You overmarried.
is, my question to you is, does she need to have life insurance? Because I got plenty of it, and I don't know. She's a stay-at-home mom for the most part.
Yeah.
Do I need to insure her?
The short answer is yes.
Okay.
And the reason is you also have a minor child.
Yes.
And if she was gone and she's the primary caregiver
She's definitely the primary caregiver.
and you're going to continue to run your business,
Yes.
then you're going to have to hire somebody to help take care of that. You also, whether you do or don't, many people don't have the college fund fully funded.
Yep.
And you might be making less because you'd be working less and things like that. So I think the dollar amount is different potentially. I mean, when you look at life insurance, there's a couple ways to look at it. One, do you need to replace someone's income? So if somebody's making $100,000 a year, if they had $1 million in the bank and you got 10% rate of return on that, you'd get $100,000. Well, you can't count on 10% returns. Maybe 5 you can. So now you need a $2 million life insurance policy. So if you died and we're making 100, you died, $2 million goes into an account, and you all of a sudden have $100,000 a year kicked out in interest at 5%, and that's how you live. The other way to look at it is just replacing debt. So if you had $250,000 of debt that's left on your house, let's say, then maybe you just insure for $250 so that your debt is wiped out, so you have lower expenses, and then you can pay for somebody to help, and you can put money into college funds like you're used to and those type of things. So, yeah, I think the short answer, I'm giving you a long answer now. I think the short answer is yes, you need some life insurance on your spouse, but it might not be equal.
Yeah.
Yeah.
So when that comes up with my wife Carol all the time, she's always like, "Why is it not equal? Why is it not equal?" That always creates a little bit of tension. But basically, what you're saying is it's okay if it's not equal.
It's all right, and it just depends on what you want to accomplish. If you want to accomplish replacement of income, or just take out the debt and go from there. But just never say zero, Matt. That's not good.
Oh, just the ideas guy. So. All right. Well, we will see you back here next time on the iWealth podcast.
All right.